European retail businesses performed very solidly. They've shown excellent growth in a very difficult market, and that shows the resilience of the brands and the growth of discount, as well as the value offering. So to have grown nearly 7% in euro terms during this period was obviously a highlight of the results for us. Again, an improvement in margin for nearly the 5th year in a row now. So we are very happy with the retail performance in Europe that has been very solid. The performance of the sourcing, logistics and group income follows obviously by this increase in activity, and it shows the resilience of the vested brands in all that market that we invested in the last 7 years.
Let's go into Europe a little bit more. I mean, there's lots of movements on the macroeconomic front. Just give us a sense of how this is actually impacting on the business on the ground.
The interesting thing that we've now found since the financial crisis in 2007 is that obviously the strategy to invest in the mass discount and the value side of the business were the right strategy. Because that market has been growing since 2009, where the middle market has been the one that suffers. So although if you look at macro figures, it's easy to see -1 or +1 and that kind of movement in Europe. But within the categories, the discount market have continued to grow, and that's obviously benefited us substantially in Europe, because the amount of people that needs to shop affordable gets bigger and bigger every day of the year.
Now, one of the really interesting things that you're doing in Poland in particular is looking at smaller store formats. How's that different, and why is that a better model than going for a larger store?
Eastern Europe has got different characteristics. You can go to Warsaw and put up a big box and it will be a success. But you must remember, if you go into Poland, into the rural areas and the whole country, millions of people don't live in the city, so you got to actually make it easier for them. I mean, a very good example to understand that is, you know, the Pepco model in Poland. Originally, they thought they'll have between 300 and 400 stores. Now they actually think they can have 1,000 stores in Poland. So it shows you that demographics require much more, but smaller stores closer to the people. Of course, in the few big cities, you can have bigger stores.
I mean, if we take that and we extrapolate that lesson and apply it to Africa, it certainly seems like a good distribution network, a very robust supply chain is what also is like to make a difference on the African continent.
Absolutely, and I think if you look at the success of Pep in Africa, it speaks for itself. You know, they started fresh in Nigeria, and today they are one of the biggest retailers there. So therefore, the network that one has, and as you say, if you don't have the right logistics and supply chain, you will not be successful. So it's critically important.
Are you concerned about the pace of infrastructure rollout on the African continent? We're always told that there's a funding deficit, but as an industry player, is this hampering the pace of distribution development on the ground on the continent?
It varies from country to country, so it's very dangerous to make a general comment about it, because some countries are much more progressive than others and depend on what kind of economies they're in and what raw materials support their industry. But of course, infrastructure does hold back expansion plans of retailers, for sure.
Now, you've made headlines last year with the Pepco deal. Bring us up to speed in terms of where we are on that front and when we might expect finalization, and what other approvals are you still waiting on?
We are at the moment only waiting for the South African competition approval, which is well advanced, and we expect that within the next 2 weeks, and then it will be finalized.
Are you expecting any resistance from the Competition Commission?
No, I mean, Pep and Steinhoff has got no competition to each other. It's two different business categories. So.
And the Frankfurt listing, where are we on that front?
Well, we obviously held that back until the Pepco deal is completed. So as I say, we hope that to happen in the next 2-3 weeks. We will then start the process to include Pepco, obviously, in the prospectus that we need to issue for a new listing. And we still hope to complete that by June.
Let's look at your 3 listings on the Johannesburg Stock Exchange, in particular the JD Group, CAP and PSG. Quick overview of each, and in particular touching on the direction of future growth for each of these companies.
The JD Group results were out yesterday. The retail business under Peter Griffiths have performed well. They certainly have turned the business around and did an excellent job. And it's early days. There's still a lot of things that they want to improve. The automotive and DIY have done exceptionally well, which is two old Steinhoff businesses that we put into the company. And with the deal with RCS now completed, we're also just waiting for